Hi everyone, welcome to Market Watch. What an interesting day in the markets. Gold breaking to record highs, the dollar sinking, getting weaker. Okay, Donald Trump threatening to oust the Federal Reserve Chairman Jerome Powell. This is unheard of territory for a central bank. And because of that, investors are wondering, what is the central bank going to do? Okay, the markets are basically punishing the United States by throwing doubts onto the US being its haven status as a reserve currency. Investors, therefore, are pumping money into gold as it hits record highs because they're looking for an alternative safe haven place to park their money. Bitcoin's now rebounding and benefiting from the dollar getting sold. Okay, Goldman Sachs is putting gold to reach $4,000 an ounce, which gives it a big upside from where we are today. Okay, and there is loads that I'm going to cover in today's video. All right, first of all, just want to shout out Daniel Francis, one of the VIP members inside my trading community. 2,800 USD profit following the trades I've been sharing with the members. Incredible. Rakib turned £300 into 7,200 this month inside my VIP. That is an incredible return. So just want to congratulate you. And Auntie sent me her profits today, £350 inside the VIP community. So well done to you guys. Obviously using the education I'm giving. And that's what this is all about. Spreading knowledge and you guys using it, following my investments, taking your own investments, but making money from the financial markets. So what is Trump doing and why are the markets reacting the way they're reacting? Okay, so the headline says it all. Stocks and the dollar slump amid Fed tariff rhetoric. So Donald Trump is trying to fire the Federal Reserve Chairman. Okay, now you have to remember central banks are independent from government political influence. This is very important. The central banks have a mandate: maximum employment, especially in America, and steady price inflation. Why is this so important? Because if you have an independent central bank from government, they will do what's necessary to keep the purchasing power of paper money constant around their inflation target, 2%, right? They don't care what the politicians want to do. Their job is to maintain the purchasing power of paper money in circulation and make sure there's not hyperinflation or deflation and a recession. Now, Donald Trump is raising tariffs, and tariffs are going to cause inflation in the United States. Okay, and you can see over here, central banks stare into trade war abyss with rate cuts primed. But look what it says for Jerome Powell and the Federal Reserve. The Federal Reserve chases a greater challenge. Levies imposed by the White House are likely to raise prices automatically. Because think about it, if Trump's raising tariffs, imports become more expensive, resulting in inflation. And the central bank and Powell came out publicly and said to the markets, I'm not willing to cut interest rates to save Donald Trump from his trade policies. Trump doesn't like that. You know what Trump's like? He's an alpha male. He wants to try to dominate the headlines, and he's trying to blame the Fed for his trade war. America was in a beautiful spot before he came into power. Stocks were sitting at record highs because the US economy was humming along strongly, growth was strong, and he's crashed the markets. Okay, and he's looking for a scapegoat. So he's saying to Jerome Powell, you have to slash interest rates to 2% because oil prices are falling because of his trade war, and the markets are betting on a recession and oil gets hit. He's saying oil prices are going down, everything's going down, slash interest rates and help me. Central bank saying no, because your tariffs are going to cause temporary inflation. And what we have to remember about central banks is they are worried about runaway inflation, okay? And runaway inflation basically means that central banks don't want inflation expectations to go outside of their 2% target because this can become a big problem. So at the moment in the United States, okay, you have inflation expectations, okay? Now this is the macro spreadsheet that we use to monitor the US economy. Inflation expectations are already hitting 6.7%. This is the consumer survey that recently came out. This is a big problem. This is what the Fed doesn't want. If consumers expect inflation over the next year to hit 7%, they're going to do what they did in COVID. They're going to go to their employers and say, I want you to pay me higher wages. I demand higher wages because I cannot afford to buy the goods and services that are coming into this country because of Trump's tariffs. So I want higher wages. Otherwise, I'll leave and go work somewhere else. Businesses who are already going to have to pass on these higher tariff and taxes on imports onto the consumer by raising prices are going to have no choice but to raise salaries, okay? And what are businesses going to do if they have to raise salaries? Pass on that cost to the consumers. So this is called a wage price spiral. The Fed doesn't want this. This is when inflation can get out of control and you have runaway inflation. The Fed is not trying to get into that situation. So when the Fed's saying, when Trump is saying cut interest rates, Powell's saying hell no, I'm not cutting interest rates, because that could exacerbate spending even more and push up prices when there's already going to be a price hike in inflation because of your tariffs. Now, obviously, inflation right now is 2.5%, 2.8%, but there's going to be the expectation that in the next month, when the new inflation numbers come out, in the next few months as well, the inflation situation is going to start to pick up. Okay, Trump's threatening Powell, saying cut rates. Look at the consumer data. This is signaling GDP growth around -3%, okay, or 2.2%, the latest consumer surveys. Now remember, the consumer drives economic growth. If consumers lose confidence, they don't spend money, and you're going to get a recession. This is why you've got all the investment banks pointing towards a slowdown in the US economy. Investment banks like Goldman Sachs are saying the US economy going into recession is now at 45%, probably around 50% after what he's doing with Powell, okay? So remember, markets don't like what Trump's doing. Powell has a very good reason not to try to cut interest rates. He's worried about the inflation coming, and he doesn't want it to become persistent for the reasons I've just followed. So Trump is saying, fine, if you don't listen to me, I'm going to explore if I can sack you. But legally, they're saying Trump can't do this. But if you challenge the independence of the Fed, investors will get spooked. And when they get spooked, they're going to say, we don't trust the government. Who does trust the government to manage inflation? Because the government is going to do whatever gets them into power. If they want to cut interest rates, so your mortgage rates go down and car payments go down and student debt, just so I can get reelected, I will do that. Markets don't like it. Okay, so listen to what it says. A sell-off in US assets deepened as President Trump stepped up criticism of Jerome Powell on social media, with stocks on the dollar and treasuries sliding amid concerns about the Federal Reserve's future independence. Okay, so because of this, investors are dumping US assets. Okay, they're selling US stocks, they're selling US bonds. Okay, the 10-year yield's going up, the 30-year yield is going up, and this is basically showing you that investors are warning Trump that if you try to sack the central bank, we're going to dump US assets. And remember, America needs investors to buy their debt because they're in huge debt, over 100% in GDP. So at this moment in time, investors are looking for safety away from US assets. And when they're selling these US assets, where do you think they're going? Into gold. Gold hits record as dollar sags and trade war concerns persist. This is why Goldman Sachs are betting gold to hit $4,000 an ounce as a hunt for haven grows. So remember, usually the US dollar is a safe haven. US government bonds are the safe haven. But the markets are saying, if you try sack Powell, we don't want to be buying your debt, and we're not holding dollars. This is why I've been selling USD JPY with my members, and you saw the profits from the VIP members there. And you can see, if you look at the trade signals, we entered this trade just the other day. So we're in a profit here. Perfect. You can see I've also been buying gold with the members, and that's why you've been seeing the screenshots of the members taking the trades with me. Okay, that's why gold's hitting $3,400 an ounce. Goldman has it at hitting $4,000 an ounce by the end of the year. Okay, so that's looking at gold having an upside of another 15% maybe, or even more. Yeah, around 15, 16%. Remember, gold is always a store of value and a safe haven whenever people get scared around central banks increasing the money supply, or they lose confidence, okay, in a country. And that's exactly what the headlines are showing us. Investors are buying gold. And also, don't forget what Bitcoin was invented for. Remember when the 2008 financial crash, when central banks were increasing the money supply massively, just printing billions of dollars? That's why Bitcoin was invented, as an alternative. because it was decentralized. No central bank could print more Bitcoin. There's only a limited supply. So listen to what it says. Bitcoin rebounds as Trump pushes against Powell. It weakens the dollar. Okay. So again, Bitcoin, and this is really interesting for you guys to pay attention to. Bitcoin, which usually trades at the same time, in the same direction as stocks, because last year BlackRock and other asset managers that usually handle trillions of dollars for private institutional investors, they started releasing and selling ETFs. Okay, so which means the community that they would usually pitch their investments to, the institutional investors, they usually only buy stocks, but now they can buy Bitcoin. That's why, for an example, when stock markets started to tumble in 2022, this relationship between stocks and Bitcoin had already become very, very close. So look, you can see when stocks went down on the left-hand side, Bitcoin went down on the right-hand side. Okay. Notice when the stock markets bottomed in 2022 and then started to rise. Okay, you had this rally here in the stock markets. Can you see this rally here? All the way over here, for an example. Can you see at the same time, Bitcoin is going up 90%, for an example. And then you get periods of time here, for an example, where the stock markets have it go up even more. Okay, Bitcoin's going up even more. Stock markets decline. Bitcoin declines at exactly the same time. Okay, and then again, you saw the huge rally in the stock markets here. Bitcoin goes up at exactly the same time. This is so you understand the correlation. Stock markets decline here, Bitcoin declines here. Stock markets rally here, Bitcoin rallies here. Stock markets decline here, Bitcoin declines here, and then you've had this perfect correlation where from there, stock markets took off until when? Trump. And no surprise, crypto took off from here to Trump. But look what's happened since then, guys. Okay, since the beginning of the year, okay, stock markets are down 16% from the beginning of the year. Bitcoin is down around 7%. Okay, so Bitcoin usually has a lot more volatility than stocks, which is why when you have pullbacks in Bitcoin here, during these periods of time, you can say Bitcoin could go down 20%, when the stock markets have a smaller decline of, let's say, 5%. But the fact that stocks have fallen more than Bitcoin is showing you that investors, again, are now using Bitcoin potentially for the very reason Bitcoin was created. If you lose confidence in the dollar, if you lose confidence in the world's reserve currency, what do you buy? The very asset which was created as an alternative to the traditional fiat monetary system. So if we start to see stocks keep sliding and we start to see Bitcoin keep rising, bingo, the correlation has flipped. And that is telling you that gold and Bitcoin are going up at the same time as the safe haven status. So how do we play this? If stocks keep falling, you can sell the stock markets. You can sell the S&P 500. You can sell the NASDAQ. It really doesn't matter. All of them will go down together. If China cannot agree on a trade war with America, stocks will keep sliding because the US will keep going closer and closer into a recession. And all you have to remember, the earnings of companies drive stocks higher. If the markets are expecting earnings to decline, which is obviously going to happen, consumers in America are losing confidence, prices are too high, then we know that they're going to sell the stock markets. They're going to sell the stock markets and they're going to sell Bitcoin. Okay, so what we do is we can sell the stock markets, we can sell Bitcoin, buy Bitcoin, or we can take our gold trades and position ourselves for the rally in gold to keep going higher. All right. So if this situation gets worse, if Trump even dares to sack the central bank, okay, you know what's going to happen. Gold keeps climbing. And if we keep seeing Bitcoin climbing, we can see that the safe haven status in Bitcoin is growing. Okay. Remember, investors don't want to buy US government bonds. That's why the headlines are telling you they're dumping US treasuries and they're selling government bonds. Look, the dollar, US stocks and treasuries slid pushing the yield on 30 years higher. Okay, so how do we trade this? We can buy Euro USD because Europe is being the beneficiary of investors looking for somewhere else to park their money. We can sell US dollar JPY again as investors look for an alternative outside of the United States. I was watching Bloomberg today that was talking about investors dumping money into Japanese government bonds, which speaks volumes because their interest rates are way below the United States. Okay, so investors are getting spooked and they don't like it. Okay, there's multiple ways to play the trade. So again, let's just reiterate where we are. We need to see what Trump does with China. What happens with this trade war? Can they come to an agreement? Does the rest of the world even give Trump what he wants when they realize that he flip-flops and he changes his mind? All we have to remember, and the most important thing to get into our mind, is whenever there are stock market crashes throughout history, and this is the crucial point to remember, if we go back to not COVID, because that was a very temporary, it was a very short crash, which didn't last very long because we all knew there was going to be a recession once the governments around the world shut down everything. So the stock market crashed by 35%, which is normal for a stock market crash, okay? But let's look at the two big ones before that. 2008, the market went down 57%. But notice the crash started in 2007 and ended in 2009. That's a 2-year stock market crash. And then again, in the year 2000, we saw the last dot-com bubble burst. And again, the stock markets crashed from 2000 to 2002. Again, 2 years. So why would the stock market slowly bleed over these 2 years? It's because it takes time for the economic data to come out to literally give you the green light that, yeah, we're in a recession. Okay, so what investors are going to be doing, let me just get this spreadsheet to come open again. What investors are going to be doing is, we all are humans, we all hope things will get better. So each month, the manufacturing data will come out, the services data will come out, which are the two most important surveys for companies that manufacture a good or provide a service. That makes up 100% of businesses. And then again, the consumer confidence will come out month on month. So it takes time for the data to deteriorate. And the more it deteriorates, that's when the markets start to realize, oh shit, the economy is collapsing. Now remember, this trade war is going to be damaging. So if we see confidence slipping, the two surveys getting more and more negative, if we start to see inflation rising, okay, the unemployment rate rising, people in America are likely to stop spending because they can't afford to because inflation is rising. What's going to happen? And you start to see higher inflation expectations. The Fed job's going to get really difficult. And the Fed's saying to the central bank, to the government, especially Trump, usually the central bank will just cut interest rates whenever there's a crash, but they can't, because what if you cut interest rates when there's inflation? You can get faster inflation. The central bank's in a very tough spot. Okay, so a stock market crash will take time, and also we watch break-even inflation rates to see the market's expectations for inflation. If it starts to get out of control, that can get very messy, right? So for you guys who are either already in my VIP training community, or if you're not in my VIP training community, you need to get positioned for this. So me and the members are profiting from these trades, and I would love to help you just with your education. Daily market updates. You can follow my personal trades. You can take your own trades using the education. But understanding what to do is crucial, because right now gold is flying. Bitcoin is rising. The dollar's sliding. And if you want someone to give you some daily updates, I would love to give you some good education on how to invest, how to grow your money, and how to make some smart investment decisions. So guys, if you enjoyed the video, let me know if you want to come and join. I'll give you the link below this video for you to join. If you're already part of the VIP, there's just an update for you guys for today's markets. And let's see what happens tomorrow. Who knows? Trump is very, very unpredictable.